What is up, guys? My name is Bryce Pruitt, this is the M1 Journey, and welcome to the channel. Alright guys, and welcome back to episode 4 of the M1 Journey. To report on the previous week, I really nothing but good news to say. All major indices were up really pretty steadily, no real major downturns. Had some good economic news, as well as Congress progressing on stimulus talks for more COVID relief, so that really drove the market this week. Tech rallied quite significantly after having kind of a little bit of a bad September, at least disappointing. So as we kind of come into earnings season for various companies, we'll see if that kind of continues this rally we're on for the past 2 or 3 weeks. So yeah, really positive news, continuing a good rally that I think will continue for the foreseeable future, because I think earnings will be definitely either meeting expectations or even exceeding them in most cases. So as far as what's new with the channel, nothing really too new or different, just trying to keep up with the Twitter and Instagram pages that you guys can follow at bpruitt_YT. Down in the description I'll provide links to both those pages so you can follow them. Just really gives you guys a way to stay up to date with me and my thoughts when I'm not posting videos, so really appreciate if you guys do that. And that's really all I have as far as big news for the week, so I'll make my disclaimer and then we'll take a look at the portfolio. I always have to make the disclaimer that I'm not a financial advisor. I'm still just 20 years old, still young and learning myself, so please, before making any money decisions, please do your own research, please do your own diligence, make your own decisions. I'm not going to tell you what to do or not to do. This is strictly just for entertainment, and I just want you guys to have a good time watching, and we'll see where it goes from there. So I guess with that being said, now we'll actually get into it. Okay guys, so this week was, like I mentioned previously, really positive. We kind of had one little downturn here last Tuesday, it looks like, and then the rest of the week was really steady gains. All told, we ended up 2% on the week, which is really strong. Very happy to see that. So that was in the long-term portfolio, and then over in the Roth IRA, we can kind of see, yeah, once again up very strongly, almost $35, so can't be too upset about that. So as far as how things did individually in my Roth IRA, Microsoft really led the way, up over 5%, which is good to see, because September was kind of hard on Microsoft as well as most tech stocks. And then only the loser was AT&T, and it was almost finished just even, so not too worried about that. So flip back to the long term here, kind of see that the winners of the week really were in my dividends, and again tech was really strong, and evidenced by Apple. Apple was up almost 7% on the week and really had a big day today. I'm not sure exactly what it finished up at, but it was probably 5+%, I think. No, actually it was over 6% today, so very strong. As far as the loser of the week, I believe, actually, I was just bragging on technology, but I believe is over in my growth, which was actually down for the week a little bit, but not too worried there. Advanced Micro Devices had a down week at just over 2%, which is actually pretty small. It makes that up in a day probably. Kind of a little bit of a volatile stock. It'll have a big day here and there, and then a kind of a bad day, so a little bit of volatility there, but overall I'm very happy with AMD, and I anticipate I'll keep buying more for the foreseeable future. So as far as dividends for the week, I did not have any. I had no dividends in my long-term portfolio this week, but I did, as you can see, make a purchase. As I mentioned previously in last week's video, I actually decided to jump in on some more Exxon. I bought $115 worth, which came out to 3.25 shares. So as I said I was going to do, I honestly did this a little bit quicker than I expected originally. I thought this would kind of be maybe in a couple weeks, but I just kind of like where Exxon's at right now. I think it's definitely a risky play, and it's not for everybody, but I'm at a point where I'm intrigued by the dividend yield. It's 10+% now, or just hanging around that. So both for the dividend potential as well as future growth potential, I think Exxon is a potentially good buy, but it's certainly not without its risk. Now, as far as my Roth IRA, this week was the bi-weekly deposit for it. But actually, due to today being a federal holiday, Columbus Day, I actually learned that M1 Finance doesn't do deposits on days that are federal holidays. I wasn't aware of that previously, but that's okay. So tomorrow's Tuesday, and the purchases will go through tomorrow instead. So not a big deal because today was an up day, so we'll see what happens. But I did earn one dividend here in the bond market at 25 cents. So kind of a slow week for dividends, but we kind of had a big September with that, and that's usually some of the bigger months. September and December will kind of get rolling on that again. As you can see, here's my purchases. That'll go through tomorrow, if it'll load. But yeah, so I learned something new about that not going through on federal holidays. I wasn't aware of that previously, but that's okay. So most of it will go in my ETFs. And then my common stock, as usual. I think Southern Company was excluded because they're kind of they've had a good last month, so they're much bigger than their slices supposed to be. So it's kind of excluding it because it's only less than $1. So yeah, very, very strong week. Not really anything too much big in news. What's going on here? Sure what that was, but okay. So yeah, long term's up almost 11, or actually almost up 11.5%, $1,400 since July 2nd. So very, very good to see that. So now I will show you the updated Excel spreadsheet with the purchase of more Exxon. We're up to 13 shares, and my long term is up to $550 annually. Roth is still $32.89, and then total is $584.76. Actually, Acorns, I'm probably going to liquidate my account probably in the next week or two, and just put it into my long term. I don't really mess with Acorns anymore. Just kind of a thing I used to throw some money in as savings, but not really worth it anymore. Kind of just want to have all my money in one, more consolidated anyway. So as far as this week, the only purchases was the $115 in Exxon, and that came back to $11.34 annual dividend added, which is a high yield, 9.86. Actually, once again, since I bought it, Exxon was kind of down, so that yield would have been a little bit higher, probably over 10% had I waited until today, but that's okay. Not really down too much. So since I don't have as much to talk about today on my portfolio, I'm actually wanting to talk about my top 5 dividend yielding stocks. So dividend yield is how much the company pays back to you in dividends as a percentage of the current share price. So dividend yield is always fluctuating. So if share price goes up, the dividend yield will go down. And if the share price goes down, the dividend yield goes up, because the dividend is a set of a money amount, and then that's just a percentage of the share price. I'll explain more of that in my upcoming series where I explain topics more in depth, but we'll get to that next week. So my top 5 yielding is actually, number 5 is actually IBM. So IBM is one of my favorite stocks that I think I'll be adding to more and more as time wears on. I really like IBM with the way they're going with cloud computing and stuff like that. I'm very excited about that. IBM has a 5.1% dividend yield, and they pay $6.52 per share per year. So they pay quarterly, and that's $1.63 per share. Like I said, I really like IBM. They grow their dividend at a high rate over the last 5 years and have been paying a dividend for 21 straight years. So a lot to like there. I think IBM will be around well into the future. Number 4 on the list is actually, where is it? Overlooking. Oh, it's down here. My bad. AT&T. AT&T has kind of had a rough go of it. Their share price is down like $20 to $28, I think. So down 4% on that position all time. But I think AT&T is a strong company, and their dividend yield is 7.34% right now at their current share price. So their growth rate isn't as big as IBM's, but I mean AT&T, you can't get much bigger in their industry than that. Maybe Verizon, but AT&T is very well diversified with their efforts in entertainment and streaming, with Time Warner Cable and DirecTV. So AT&T is another thing. I think they'll be around forever, and I'll be looking to add more AT&T for the foreseeable future. So my top 3 dividend yield are all actually in the same sector, all in the same slice, and we will start with Pembina Pipeline. So Pembina is a smaller size company, Canadian pipeline company that specializes in transportation of petroleum and oil. So Pembina, it has an 8.51% yield. It comes out to $1.89 annually. But the interesting thing about Pembina is they pay monthly. So most companies pay quarterly or 4 times a year. Pembina pays 12 times a year. So right now they're paying almost 16 cents per share per month. So that's kind of what I like about Pembina. They're a good company, but they offer that steady cash flow that's really important for any portfolio. I kind of like where I'm at with Pembina, so I don't anticipate I'll be purposely adding more. It'd just be when I make a deposit and M1 decides I need more Pembina with the slices. So I'm kind of comfortable with Pembina right now. Number 2 is an old favorite of mine that I talk about quite frequently, but is also my biggest loser in the portfolio, is ExxonMobil. So Exxon has had a just really, really terrible year as far as share price. At one time they were over $70 a share, and now that's been cut in half down to less than $35. And because of that, their dividend yields all the way up to 10.02%. But I mean, Exxon, less than 10 years ago, by market cap, was the largest company in the world, and they have a really, really strong track record, growing a dividend at a high rate over 5 years at 4.9%, pay a healthy amount per share, $3.48, and they pay quarterly. And they've also been paying for 19 years, so that means that they overcame the Great Recession in 2008 and have seen ups and downs with the economy, but they still stood strong. And I think Exxon will never probably come back to those $70 highs, but I really feel like maybe $50 is realistic in the distant future, but we'll see. I mean, Exxon's definitely a risky play, but I feel like personally it's a strong play at this point. And then lastly, at number 1 is the third member of my energy pie, and that's Enterprise Products Partners. So Enterprise is down on my position 8%, but with their dividend almost completely makes up for it annually, because their dividend's at 10.46%. So they pay $1.78 quarterly or annually, and then they pay quarterly at almost 45 cents. So Enterprise has had a kind of a bad year, but I mean they're also a good company. They're very well integrated, very well as an upstream. So they they kind of specialize in transportation of oil and petroleum, so they're not so much as dependent on the price of a barrel of oil. But so they're a pretty solid company, but they definitely have risk involved as well as any energy company at this point. So so those are my top 5 yielding companies. Like I said, I really like IBM and AT&T, and really will be bullish on them in this future. For the energy stocks, I'm not bearish, but I'm definitely more cautious about adding even more to them than I already have. Exxon I did just because I felt like it was at a good place, and that's the energy company I'm probably most bullish on, but we'll see where it takes me in the future. So yeah, guys, I think that'll wrap up this portion of the video. So that'll take us into the final comments of the video. As always, please like and subscribe if you enjoy the video. I really appreciate it. And to subscribe, just hit the button down below. Stay up to date with all the latest content that I'm producing. I'm actually looking at starting next week. I will probably be introducing my second series where I'll kind of explain some of the different concepts within investing, just explaining what they are, how they work, because I feel like a lot of people biggest fear in investing is that they don't know what they're doing. So I'm going to try to help that out and help people kind of along with that and trying to teach them different things about investing. So if you're interested in that, please comment down below to kind of give me my first topic that you might be interested in me covering. Along with that, as always, please join M1 Finance if you wish, using my link in the description. That'll help you guys out because M1 will give you $10 when you sign up and deposit $100 into your investment account. Or if you're starting a Roth IRA, it's a $500 minimum deposit. So just do that. Get that free $10 if you're interested. And as I always mentioned previously, follow the Instagram, Twitter pages at @bpruitt_YT. Really helps me out, helps you guys out to stay up to date on everything. So I guess I'll close with my usual viewer question of the week. Please leave a response in the comments and comment on anything else you want to. But this week's question is, what is the best high dividend yield stock that you want to either buy more of, or if you don't own it yet, what you would want to buy? So like I've covered in this video my top 5 yielding stocks. So like what's your I guess top yielding stocks? So like stocks I'm wanting to buy more of that are high yielding are actually both IBM and AT&T. I think in their respective industries, I think they're some of the best around, and they'll be here for a long time. Both companies have kind of seen their share price dip a little bit from their highs, and I still think there's really a lot of value there long term, both from a growth perspective and as well as a dividend perspective. I don't really let the high yield scare me off too much. I mean, you don't want to chase yield too much, as I mentioned previously, but I think it's not something that you have to worry about as much with these two respective companies. I am pretty confident in both of them, and I'll look to continue to add more to my positions in the future. So, but yeah, leave your response down in the comment section. Comment on anything else you want. So I think that takes care of everything I gotta say for this week. So I will catch you guys in the next video. Thanks for watching.